This may surprise you, but even garden gnomes can be depreciated for tax purposes. Yep, you heard right, garden gnomes. Hey everyone, Andy Trinh from Duotax here for another video designed to help you become a better property investor. If you're an avid viewer of the Duotax YouTube channel, then I'm sure by now you know that you can significantly boost your cash flow by claiming tax deductions on a large number of various household items through depreciation benefits. Of course, they're the standard things that you know are subject to wear and tear, like carpets, stovetops, blinds. But did you know that under the government's taxation ruling, garden gnomes can be depreciated for tax purposes? And that's not the only unusual item. In fact, we have 7 that we want to share with you today. They may be strange, but they'll save you money nonetheless, so stay tuned. Before we get started though, we want to be clear that this video is for informational purposes. In no way should you interpret this as financial or tax advice. We always recommend working with a qualified financial advisor or tax agent to give you the best advice for your situation. Now let's jump straight in. The first unusual item on the list is artwork. It's an unusual claim because technically artworks appreciate over time, but according to the taxation ruling, there are a few that will depreciate over 100 years. These items have to be artworks qualifying as depreciating assets, and according to the ruling, these are works of art and reproductions of artwork that are tangible in nature, such as paintings, sculptures, drawings, engravings, and photographs. They must also be displayed in open viewing areas in premises used for taxable purposes, including reception areas, waiting rooms, and foyers. The next unusual item you may not have thought to claim depreciation on is working beast and beast of burden. I didn't name them, so don't shoot the messenger. For example, if you use camels and horses as part of your business, you can claim a depreciation deduction at a rate of 13.33% over a period of 15 years. The third and fourth unusual depreciable items are also animals. The first is working dogs. The taxation ruling gives a long list of what kind of dogs qualify for a depreciation deduction, and these include certified therapy dogs used by qualified therapists, detection dogs, guard dogs, performing dogs, police dogs, and security dogs. You can claim depreciation at a rate of 25% over a period of 8 years. But there are specific exclusions listed as well. So assistant dogs like guard dogs, hearing dogs and service dogs, pet dogs, racing dogs, support dogs, and working dogs used in primary production don't qualify for a depreciation deduction. The second is racehorses. According to the ruling, if you have thoroughbred horses that compete in flat racing, standardbred horses that compete in harness racing, or thoroughbred horses that compete in jump racing, you qualify for a depreciation claim. You could also claim lead and companion ponies. Each horse has their own effective life, so the flat races will depreciate at a rate of 40% over 5 years. The ponies also depreciate over 5 years. Harness racing horses depreciate at a rate of 28.6% over 7 years, and jump races depreciate at a rate of 20% over 10 years. Okay, the next item you wouldn't think to claim a deduction on are concrete swimming pools. Concrete is typically a capital works item. That's why it's strange to find it on this list. But the tax ruling allows for concrete swimming pools to be depreciated over 50 years instead of 40. Which are what the buildings depreciate at. The ruling does note, however, that the swimming pool must be used as a plant and equipment asset in a business. In other words, you need to generate an income from its use. The sixth item on this list even caught me by surprise: judges' robes. There are very few depreciable clothing items on this list, since most of the time clothing is either not claimable as a business asset or claimable as an expense. But a judge's robe is one of the few exceptions. So whether it's a ceremonial robe or a working robe, a judge can claim a depreciation deduction. The ceremonial robe has an effective life of 15 years, so it will depreciate at a rate of 13.33%. And the working robe has an effective life of 10 years, so it'll depreciate at a rate of 20%. Next up are professional libraries, which depreciate over 10 years at a rate of 20%. This is the general effective life for textbooks. The guidance on the ruling states that if a book costs over $300 or is part of a series where the total cost of the set is over $300, then it must be depreciated. Lastly, if you build a cubby house for your childcare operating tenants, then you'll be happy to know that it is also a depreciable item. Other playset items include forts, slides, swing sets, and trestle frames. They all have an effective life of 8 years, so they'll depreciate at a rate of 25%. This is only applicable for childcare services and not residential properties. So there you have it, some of the more unusual depreciation claims. The point of this video was to show you that nothing is off limits. So if you want to claim for your racehorse or cubby house, why not maximize those deductions? The ATO has given businesses and investors these tools for a reason, and you should definitely be making the most of it, because at the end of the day, depreciation could make a massive difference to your bottom line. If you're interested in learning more about other depreciation deductions you can claim, make sure to check out our YouTube channel where we share a whole lot of property investment tips and depreciation insights. And if you know someone who may own one or two of the things not on this list, make sure to share this video with them. Otherwise, that's it from me, Andy Trinh from Duotax. See you next time.